Hey everyone, welcome back. If you're drowning in tax debt and considering bankruptcy, you're probably wondering, wipe out what I owe to New York State? The answer is maybe. Some tax debts can be discharged in bankruptcy, but not all of them. Let's break down the rules. First, you need to understand that tax debt is treated differently than credit card debt or medical bills in bankruptcy. It's not automatically dischargeable. There are specific criteria that have to be met. For income taxes, which is what most people owe, here are the general rules for discharge in a Chapter 7 bankruptcy. The tax return must have been due at least 3 years ago. So if we're talking about your 2021 taxes, the return was due in April 2022. You need to wait until at least April 2025 before that debt could potentially be discharged. The tax return must have been filed at least 2 years ago. If you filed late, the clock starts from when you actually filed, not when it was due. And if the state filed a substitute return for you because you never filed, that generally doesn't count. You need to have filed an actual return. The tax must have been assessed at least 240 days ago. Assessment usually happens when you file your return or when an audit is finalized. There needs to be at least 240 days between assessment and your bankruptcy filing. There can also be no fraud or willful evasion. If you have deliberately cheated on your taxes or tried to evade payment, that debt is not dischargeable. If you meet all these criteria, your New York State income tax debt may be dischargeable in Chapter 7 bankruptcy. But notice I said may. Bankruptcy courts have discretion, and the rules are complex. What about Chapter 13 bankruptcy? In a Chapter 13, you're not wiping out debt, you're reorganizing it into a payment plan. Tax debts that don't qualify for discharge still have to be paid, but you may get some help in more favorable terms and stop collection actions while you're in that plan. A few things that are never dischargeable. Trust fund taxes, like sales tax you collected but didn't remit, are not dischargeable. Penalties for fraud are also not dischargeable. And tax liens that were recorded before your bankruptcy filing, they do survive the bankruptcy, even if the underlying debt is discharged. So if you're considering bankruptcy as a way to deal with tax debt, you need to do the math carefully. Timing matters. The type of tax matters, and you need to understand what will and won't be wiped out. As always, work with professionals who understand both bankruptcy law and tax law. This is one of those areas where the intersection of the two gets complicated, and you don't want to make mistakes. See you in the next one.